Good evening, everyone. This is Rajendran here, joining from Marketcalls, and welcome everyone to live training session on how to trade in a high volatile market, especially using tools like market profile and order flow kind of tools. So, in this agenda, particularly, we're going to talk about how to handle the current volatility situation in Nifty and Bank Nifty, how we can understand how volatile the markets are compared to the last couple of days back, and how we can use, what are the nuances we have to use to trade, especially using market profile kind of concepts. So before getting into the session, just give me the quick confirmation about the audio and video quality. And as usual, the session is getting recorded. So most likely the session will be posted in the YouTube channels as well. So just give me a quick confirmation about the audio and video quality. All right, great. Thanks, Gokul, Bhavesh, Rajashekar, Sukramani. Good to see you all back. Lot many new faces and mostly familiar faces I'm seeing over here. And thank you, Sanjeev, Ravi, Shrikant, Karan, Kamal Raj, Satish, Nitin, Sankratem, Vivek. Right. So good to see lot many familiar faces over here. Right. So great. Let's quickly get into the session. But before to that. Right, so let me put you a small question over here. Like, what is your trading experience? Just to get a fair idea about today's crowd. So I'm so far seeing 270 people in the trading room. Just put in your numbers, right? So 1 year, 3 years, 1 year plus, pretty good. So many people are from 1 to 2 years, and some people are even 5 years, 14 plus years of experience, 19 years from Pinak. And great, so 11 years from Sanjay, and Pino 3+ years, and most of the people are around. So some people are even having in days 362 days, which is quite interesting. All right, so Indran is from 8 years and Durga is from 2 years. Great. All right, so thank you, folks. So without further delay, let's quickly get into the session. A little bit about me. My name is Rajendran. I'm the mentor for your today's session, and I've been trading and writing about markets for quite some time now. I've been a trader since 2006, trader and investors right from 2006 onwards. Last 6 years, right, my core focus is been getting into short-term trading and very short-term trading using principles like market profile and order flow. Otherwise, my core expertise is in system trading using tools like Ami Broker, Ninja Trader. I used to be an system developer. Like I used to design systems, and most of my systems are in. I kept open source in my website marketcalls.in, and I'm also the founder of the webinars as well. I guess webinars, you might off late you might be hearing the terms webinars from Marketcalls. Like I've been the co-founder of webinars. Like webinar is a kind of an community to build professional traders, and what I am going to talk about in today's session is that in today's agenda, I'm going to use tools like Ami Broker and Ninja Trader kind of tools. On top of Ninja Trader, of course, I'm going to use tools like Bell TPO, Market Profile, and Order Flow kind of tools. I'm going to trying to explain what is the state of the markets. And of course, how many of you are in quarantine now? I guess everyone should be in quarantine, right? So much of negative news is happening, right? So if you open media channels or if you open Twitter or everywhere, the corona is there, right? Of course, we are one of the least country. We got a very less infection so far, less than 1,000 at this point of time. But I guess still the sentiment is really bad out there, and most of the shops are shut, and in fact, most of the business are shut. And despite that, markets has been keep on going up. That is the important topic I'm going to talk about. That how to understand what is happening in the economy and what is happening in the market. So you can see that two parallel dimensions. Both are economy is completely different from the markets, right? So let me talk about by starting with a monthly charts, right? So it is always good to take a fresh start. It's always good to take a fresh start whenever the markets are doing something bizarre things, right? So let's always start with an charts with monthly. So you can see that monthly trend is clearly down last 3 months, January, February, and March, right? March series is one of the volatile series we had ever experienced in the human history of Nifty futures, right? So look at the volatility here. at least this is one of the charts I would like to talk about here. This is what I'm showing over here is that the intraday high and low volatility. The intraday high and low volatility, if I try to explore for the month of Nifty March series, you would have find fascinating stuff over here, right? So what is so fascinating about the series is that the high to low, that is the intraday high minus low, if you see that the range is almost, at least last couple of days, it's more than 500 points. Every day we are seeing a 500 points movement. Every day, which we used to get for the entire month, we used to have a 500 to 600, 700 point of range. But now we are, that 1 month of range we are getting in a day. That is the kind of volatility right now we are right now. 1 month of price activity, it is happening just like that in a day. And that too, most of the time, it just gets done in the first 2 or 3 hours. We are mostly doing that 500, 600 points, just like that. Casually, it's happening in the markets. This, we had never seen this kind of volatility ever in the past. But something, the markets are changing. So that's the nature of the market is what? Can anybody say what is the nature of the markets? So let me put the question over here. What is the nature of the markets? Just type it out. Whatever comes into your mind, just put it in one word. What is the nature of the markets? What do you think? Some people are saying random, unpredictable, fear, change, volatility, oscillator. Of course, the key nature of the market is that it changes very often. It changes very often, right? It's not the same market we are dealing in the past. In the past, we used to have a 50-point price action, 100-point price action. There are days we had seen even only 44 or 55 points of intraday price action. Now we are seeing 10 times bigger, 10 times, 12 times bigger. And even we had a day where we had 1,830 points of price action. This is almost 1 year of price action. If you take the 1 year of price action, even last year, I doubt whether we had done 1,800 points last year or not, 2019. Its entire range would have been pretty much different. Now, the 1 year of range we are doing in just intraday, we are doing it, which is quite difficult to handle for most of the people. But there are places, if you're going to use tools like market profile kind of tools, we can get more clarity. We can get more clarity in thinking. We can get more clarity about what is happening inside the markets. So what these kind of high volatile zones. So high volatile zones are pretty much tough to play with futures. Honestly, I've been avoiding futures for quite some time. At least with this kind of volatility, it's very, very difficult to manage with futures. Let me tell you why. Because I've been seeing this 5-minute charts of Nifty. It's been going on like a 5 minutes of bar chart is like moving 80 points. A day of activity is happening in 5-minute charts. And a year of activity is happening in a daily charts. So, which is very, very tough to play with futures. This is my honest opinion. And if you're going to do that, you have to be really lucky. If you are lucky, right, you can, yes, definitely you can make a lot of money out there, because just like that, if you're right, you can make a lot of money. But if you're wrong at the same time, things can completely go haywire against you. It's very, very difficult to manage, because we cannot manage with a tighter stop loss of 20 points, 30 points, which we can able to manage earlier. Now it's very, very difficult. Just a 5-minute candle is enough to do the damage. So these kind of plays, we need to have a strong understanding about what is happening in the markets. We need to have a strong idea about what is happening. So when I say what is happening in the markets, what traders are trying to do, what traders are trying to do. When you have an idea about what traders are trying to do, you have an idea about what the markets could do next, what the markets could do next. So that is what we call it as a predictability, right? That is what we call it as a predictability. So definitely, maybe at times you you might short the markets and then it straight away it goes down. It's so easy to say that, but ask the people for them which went wrong many times, or even 1 or 2 times is enough to do the complete damage in the portfolio. Because managing a 600 points intraday volatility is not a joke, right? It's a serious money is there, but at the same time, serious risk is also there. Whenever there is a serious risk, whenever there is a serious money for everybody, whenever there is a serious money is there in front of our eyes, like there is a serious intraday money is there. At the same time, there is a serious risk is also there. Serious risk is also there. If you're right, you're going to make serious money, and if you're going wrong, you're going to end up taking a serious risk of losing bigger chunk of money from your portfolio. Now, these are the places you have to learn to handle in a reasonably a fair manner. So part of the game, what I had done in my trade, let me tell you, what I had done is that I said to myself, like, I'm not going to carry forward. So I stopped carry forwarding my positions. I stopped carry forwarding the positions. Let me tell you why. There is one reason there, because of the increasing VIX. The VIX was increasing VIX. VIX was continuously increasing on a day-to-day basis. At least now it has been cooled down a bit, but last 2 weeks, forget the last week, but other than last week, the previous weeks in March, first week of March, second week of March, and third week of March, it's a crazy volatility there, and VIX is not coming down. When the VIX is not coming down, it indicates what? Total uncertainty in the markets. A total uncertainty doesn't mean like market always has to go down. It can go down, but at the same time, when there is a VIX is keep on rising above something like 60, 70, 80 kind of levels, what you will be getting is a total uncertainty. Every day you will be seeing a gap down, and then gap down of 400 points, and price will be ending up with plus 200 points. We had seen that such kind of days. Now these are the days we had seen such kind of impressions over here. Think about this particular day where the price was yesterday like negative minus 779, again minus 200, minus 499. Continuously it was keep on going down, but all of a sudden next day it was like 531 kind of point. That too after a big gap down. A big gap down on 20th, followed by that there was a complete recovery. Even this particular day also, the gap down was almost minus 600 points at some point of time. Minus 600, and then it recovered back like minus 227 points. And this particular day, when the nation was shut down, like entered total India goes for a lockdown, we opened almost minus again 500 or 600 points, something like that. So we are supposed to open 500, 600 points like that. But instead, what happened on that day? I guess this is the day, right? We opened around minus 7,800. We opened around 7,800, roughly around some minus 150 kind of points, but recovered completely. We went and closed plus 512 points higher when the nation lockdown got announced. So part of the game, what you should learn to do is that whenever there is an extreme negative news is there, there is extreme negative news, which is very, very common in these kind of environments. And that gives you a potential intraday trading opportunities. But however, if you think about carry forwarding the positions, it's really difficult for you to manipulate which way tomorrow market is going to open. And Monday, I'm seriously, honestly, I don't have any idea about where we are going to open on Monday. But once the market open, I have a fair idea what I should do on Monday. So one of the day I have one such day I like to talk about it, like the Nifty, right? So this is one of the day where I handled my trades. This is the day. So this is one of the days. It's an expiry day where Nifty was keep on opening gap downs. There was a multiple gap downs we have been seeing, right? So this is a first gap down, first one, and there's a second gap down, third gap down, and fourth gap down, Think about the amount of gap downs which is coming here. Like fifth gap down, I never seen in any of this trend, any of this downtrend with almost 5 gap downs opened. So one of the day we had a sixth gap down also, but it got cleared. Again, similar setup was arising this particular day. This particular day, anybody remember why this gap down occurred? Opening, there was a big gap down. On if you want the dates, let me tell you the dates. It is on 19th. Any idea why that gap down happened? You can just type it out. You can just type out in the chat section. It's an expiry day, but on the day of expiry, we had almost 500 points gap down, and then immediately even price went back down. Of course, the S Bank. It's not the S Bank. It's not about S Bank. It's not about the lockdown. Lockdown happened over here. Lockdown happened on Tuesday, right? So it happened supposed to be on 24th is what the lockdown happened. It's not the lockdown. It's not the Yes Bank. Of course, there was an is that a day with lower circuit, but it's mostly because of that worldwide corona infections was crossing some major levels, right? And then a lot of disturbing sentiments was there, like people are anticipating RBI to provide, and then crude was going down, right? Crude was almost like 20.25 levels it was testing. Crude was crashing, right? So there was a deep crash in crude, and a lot many things are not going well. Lot many disturbances are there, right? And of course, US markets are in freeze, and of course, US markets are in freeze. Crude is down, and a lot many things. It's not S Bank. S Bank, I think it happened over here. This is the day the S Bank thing happened. So then all the European markets are down. Our Indian market, all the global markets are down. So lot many things, and because of that, our Indian markets also down. So I would like to talk about on 19th. This is on 19th of March. But what happened in the market profile is something crazy on that particular day. So when things are getting rough, whenever you are seeing rough sentiments, so these are one of the day I would say like this is a kind of a extreme negative sentiment. Extreme negative sentiment. And you know that the volatility is rising every day. The volatility in the markets are rising continuously. If you see the ATR charts also, let me pull up the ATR charts. Yes, here is the ATR charts of daily. I prefer using ATR 10, and the ATR 10 is like so far it is rising, and at least last couple of days it has been cooled a little bit. It's been cooling a little bit, which is most likely it's supposed to cool down for quite some time. And if you see the trend was vertically going down, vertically keep on going down. And so what I had done here is that I prepared myself. Like I've been seeing the sixth gap down. Like we talked about the gap downs, right? So there are 1 and 2 and 3, 4, 5, sixth gap down. So one of the sixth gap down, I've been seeing that. I said to myself, like a lot of negative news is there, right? So a lot of negative news is there. In that case, let me open up the market profile charts also parallelly side by side so that you have a fair idea about what happened on that day. So in order to do that, I have to bring up the March contract. So somehow recently I removed the March contract because the contract changed, but still let me get it back. So the March contract expiry is on 26th March, right? 26th March 2020. So let me pull up the March contract. So that March contract, so this is January contract. I'm going to change it to March contract. So generally, I prefer using a TPO size of 1 point. How many of you are very new to market profile? All right, Money is new. Nitish, Anand, Vinod, Roshan, Prasad, Manoj, Anirban. Oh my God, a lot of new guys. Okay, let me tell you what market profile does then. Maybe it's good to have some little bit of primer out there. So market profile, every day it creates a price distribution pattern. So here we focus more on price distribution rather than price. So many studies it focus on price based trading, and even indicators are nothing but price based trading. Whereas market profile focus more on what traders are trying to do in the markets and how you have to position yourself when things are getting extreme. What are the levels you should watch? Now, I've been watching a very crucial level from an for that particular day, because one of that day is a very extreme sentiment. First of all, I'll come to this day. I'll try to narrate what happened on that day. So this particular day, on 19th of March, right, it was breaking a major support levels from one of the major swing levels from this particular day, right? So it's been breaking the 7,900 mark, which is the 2017 low. 2017 low. So I had taken that reference in the early morning. I had taken this reference and I was watching those levels, right? So this level, let me bring it to the market profile chart. So this level is like, if I measure the level, that level was roughly around 7910, roughly, right? So it's not an exact level, somewhere around roughly 7,900 levels. So let me better measure it exactly. So let me go to the 2007 zone. So here is the exact low. The low was 7896. So let me double click and let's say 7896. So whenever a major swing high levels are getting broken out with extreme emotions, I'm talking about extreme emotions, okay? Remember that. So let me take those levels into the market profile charts. So this is a market profile chart, and I'm going to go to the 19th of March, and I'm going to key in those levels. 7896 is the level. So I can double click on the line and I can say 7986, 7896, 7896, apply. So that exactly I'll be able to match those lines. So that particular day I was watching this level, right? So this level will be used not as a support, but I'm just looking at, I'm very curious about trying to monitor this level. Now, what I had done here is that these kind of extreme sentiments, one of the places you can go and buy out of the money call options, because many times from my experience, I had seen that most likely these kind of levels, whenever a major level, this is a 2017 low, 2017 low. That's one of the major swing low, and price was breaking, like price opens here, immediately it went breaking the lows, and then price started going down and down. So these kind of lows, whenever a major swing low is broken with emotions, I'm talking about emotions. Why the emotions are there? Multiple factors are there. One is the US markets. The US markets are locked at the down circuit. Down circuit was there. Down circuit are probably, I think, 10% or 12% down, I guess. Overnight was down by 12%, and live markets are again locked by another 5% down. That is what the scenario is. And on oil is something like, oil was down something like an 18 or 24% down, something like that. And all the European markets are down. So European markets are down. European markets, Italy has been down. FTSE is down, like DAX is down. You see anywhere, everything is crashing down. Asian markets are clearly trading down. Most of the European markets are down by 7%, 8% previous day, right? So crazy. It's one of the craziest days, I would say that. And we are about to open gap down, like we are about to open around. So previous day we closed around 8,400, and today the opening itself around 8,100. Immediately there was a drop towards another 200 points drop, which is like around 920. If you are seeing around 920, we are completely trading around the 7,900 levels, which is almost 500 points down. 500 points down. So that time I was watching this 217 low. Now these kind of extreme indications are present, right? What generally in the market it happens is that these kind of news get digested whenever key reference levels are getting broken, and the bottom will be made in the very first minute, or at times max to max 5 minute or 15 minute is what it takes a very little bit of settling time to make it out. So by that time, I was looking into the options. Most of the option premiums are dangerously high. So I had to go for an out of money call option because I thought like maybe this is one of the good plays. But since already 6 gaps has been there, maybe fair chances are there that we are going to bottom out in less than 5 or 15 minutes. That's the maximum decision I had taken out, like 5 or 15 minutes. 15 minutes, that's the maximum time where we can go and take a trade over here. And what happened on that day is that basically price first 5 minutes it haven't it still went down. I taken my trade at the opening itself. I taken my trade over here. Since the IV in the options are very high, IV was something like 80s and 85 low on those particular days, right? So the option premium haven't lost much. I taken around 8,300 call, I guess. Around 21 I had taken. Price was dropping 200 points against me. Price was dropping 200 points against me, but my 21 rupees premium went to 18 rupees. This is on the day of expiry. This is on the day of expiry because of the IV, right? So I got saved. Otherwise, it could be a doomsday for me. I know that out of the money options cannot just like that. It cannot drop when the IV is so high. So that 18 rupees premium, it even went to 18 rupees. 21 rupees premium, it went to 18 rupees. And the way I expected was like within 15 minutes. The 15 minutes, the bottom happened. And if it is a serious sellers, right? If the sellers are serious on that day, what would have happened is that when they are breaking a major reference levels, something like a 2017 low. 2017 low is one of the major reference level. According to many investors, according to many traders, whenever the price is breaking a swing low, what you should do is that you should continue monitoring for where the activity is happening. If it is a good seller, how the activity will be happening here is that more and more downside activity will be happening here, and price will be moving higher. I mean, price will be moving lower. More activity will be happened. Time wise, more activity will be spent on the lower side. Time wise, more downside activity. It should have been happened if they are serious sellers, right? If they are serious sellers. And if they are not serious sellers, what generally happens? If they're not serious sellers, they will try to break a key level. They will come back and they will do more activity above those levels, above the 2017 low. So that is what it was happening. That it was somewhat I've been getting slightly fascinated about that. Okay, if things are back to normal, and my premiums are like 21 rupees premium that started trading around 22 something around that, but still I was down by 100 points down. My entry was around 916, somewhere around here, right? So price started trading in this band. So price opens here, it pulls back, it keeps on whipsawing around, and that premium 21 rupees premium was like 22, 23. It keeps on fluctuating around those levels. And then so this is an indication that this is an indication of what do you think at this point of time when price is breaking a major reference level and it is not going immediately on the downside direction? So those are the places you have to think a little bit. So that is where the market profile helps you. You can see that. So in order to help you with the letters, so the letters are high, because of the high volatility, you're not able to see the letters. For your understanding, what I'm going to do here is that I'm going to go to the indicators. I'm going to slightly increase the TPO size. There is a indicator called TPO size. So let me put something like an 80. Probably an 80 will do, I guess. 80 or 100, because 100 is like every 5 points movement in Nifty, I'm going to get a letter. The 5 point of price action, I will be getting a letter over there, so which will be easy for you to read the charts. So that particularly, let me expand it. I'm also going to split the profile. The splitting the profile is like watching the bar charts. It's very as good as watching the bar charts over here. Now, what happened on that day is that here is the letter open. This is the open of the day. The letter A represents the first half an hour price action. Letter A represents first 30 minutes, that is from 9:15 to 9:45, right? So price opens over here. It went a little bit up, started dropping down, and this entire activity got done within less than 15 minutes because the emotions are running high. Most of the traders are panicking and they are thinking that most likely it's going to be a circuit. Of course, it's an expiry day as well, and markets are down crazily by 500 points. 500 points is like almost 6-7% is almost gone by the time, right? So 6% down. Markets have been trading 6% down, and when price is going on like 7,800 kind of levels, even I thought like whether the Nifty will come back and close 8,300 or not. That's the kind of thing which was running at that mind. But I thought like, yeah, these are the places market gives an extreme opportunity for you to go and trade against the entire crowd and to monitor it. Price come back again. Letter B started. Letter B is like letter B runs from 9:45 to 10:15. That is where you'll be seeing that letters. So price was coming back at B period. Again C period it went down. Again D period was still moving around like. So C period goes from 10:45 to something like 11:15, and D period is like going on like 11:15 to something like 11:45. So until then I've been keep on holding up. The premiums are slightly eroding. The 21 rupees premium I seen it went to some point of time 36. Again it got back to 21 levels. Again 18. Again 21. It was kind of seesawing, roughly moving back and forth around the 21. Now then comes the D period. D period done a day break. Like you see that the D period breaks the day high. It clearly breaks the day high. The huge move, and by the time it's still not closed the gap at all. When I say a gap, when I say the price is opening gap down, I'll mostly refer to the price which was referred from the previous day low. This is a previous day low. So market profile is one of the best tool to visualize the highs and lows. So this is the previous day low, right? So previous day low, and what I had done here is that there was a good spike which was coming in. That spike, this D period spike, is where I managed to close my trade, the 8,300 trade. That is where the 21 rupees options went to something around 173, I guess. So somewhere around 173 it went, and I had managed to close my positions. But still, what is happening is that still the day is not a good trading. Still the day is getting more and more visual. What I'm talking about more visual is that this is E period high. So one of the E period high. E period comes around 12:15. Around 12:15, I'm still started seeing this information. If you see the E period, right, the E period high. If I draw a line to that L period, what you can see here is that you will be able to surprise to see that the L period low, which is nothing but the previous day low, is exactly the E period high, which is nothing but the today's high. Today's high was exactly as same as the previous day low, and it started dropping from that. Now, whom do you think who comes and trades exactly when the gap is closed? Who comes and sells this market exactly? From there, exactly somebody was selling this market, and price moved from 8,370 levels to almost to 8,100 levels. There was a drop of 270 points. But whom do you think who will be responsible for this kind of trade setup? Who comes and short exactly around previous day low? Do you think investors they do that? Or institutions they do that? Or traders they do that? Or scalpers they do that? Or algos do that? Whom do you think they are doing this? Retail, day traders, intraday traders, algos. I guess most of the people are already familiar with market profile terminologies, it seems. Yes, of course. So mostly, I would say that this kind of somebody is really stopping the market here. Exactly. Not even 1 point above or not even 1 point below. somebody was stopping the market exactly, and then price was going back down. Not just 50 points, not just 100 points, but almost 200 points down. Like it's a price action move from 8,370 levels to almost a low of what is this low here? Almost 8,070 levels. Like kind of a 200 and 300 points price action. 300 points price action. Somebody was pushing it down. These kind of setups can be only done by can be done possibly by algos, or most likely some traders. Traders, I'm not talking about retail traders. Retail traders, they never do like this. Retail traders cannot be this perfection, and they don't have the muscle power to stop the markets. But think about that. Somebody is having a big money power. They're having a big money power out there. So unless they are not having a big money power, you cannot just like that to stop with a 1 lot or 2 lot. Market will not stop there. Just like that, 1 lot with 1 lot or 5 lots or 10 lots, even with 100 lots, you cannot stop there. Some traders, they have a sizable position. They're traders ideally, right? So they're not small traders. Ideally, they are traders. Maybe they can be HNIs or ultra HNIs, or it can be even algos, as we speculated over here. They're coming and pushing it down. So just think for a minute. Does an investor will do like that? Let's say an institution, do they come and buy or sell exactly at the previous day low, and they want to buy for next 10 years? Will an institution who is thinking about long term, will they do that? They don't do, right? Institutions, they don't care about such kind of references. These kind of exact references, previous day high or previous day low, these kind of references are mostly cared by the trading community. Probably a big trader, of course. Definitely, it's not a dumb trader. He's a big trader. But what auction market theory says is that repeatedly such kind of auctions gets faded out. So these kind of trades are very interesting trade setup. Yes, it is done by some big trader, but ideally it is a weaker reference. So such kind of reference we call it as a visual reference. Such kind of visual reference. I'll show you one other example on Reliance. I've been explaining to my option hydra students. So I'll show you what kind of references the traders they manage to trade the game, right? So I've been explaining such thing. I'm going to explain later on, but focus on this visual reference. That is saying that this is not a good activity. This is most likely a weaker activity. Most likely it is, at least it is not coming at letter A period or C period. In that case, we might take it differently. But this is coming at an E period. Some other day, during middle of the day, we are seeing that. That kind of references usually have the odds of pulling back up one more time. So I had taken one more longs, again one more intraday longs, and I had covered my positions over here. So multiple trades I had done mostly on the long side, and yeah, it was an kind of one of the beautiful setup. Market doesn't use this kind of beautiful setup. When it is giving up, you have to be in a position to take and trade such an emotional day. Not many people, they cannot handle it, because not many people, they don't recognize that it is an extreme opportunity to go long, because they don't have a pretty good idea about the other gaps. Other gaps are simple gaps. They don't break the major reference levels. But this is one of the day, it was breaking one of the major swing reference level, and what it turns out to be something called a breakout failure, something like kind of a breakout failure. I just call this as a breakout failure. So we have a lot many breakout failure setups. One of this is a major breakout failure. The setup name is called as a breakout failure. Whenever a key reference level is taken out and price is not able to sustain below those lows, it started doing activity. Like more time-wise, more activity is getting spent over here. That is why if you try to count the number of letters over here, this is letter A, B, C, and D, almost 4 TPOs over here. After some time, the activity is building higher, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 9 activity. 9 times the particular price is continuously getting tested over here. So these are clear indications that this market is not willing to go down on that particular day. On that particular day, in a very, very short term, the markets are not willing to go down. So that's an indication of what? Not so good sellers. If there is not so good sellers, what happens? When a key reference level is broken, it immediately comes back in, it does more activity, and it keeps doing higher activity over here. That is how we call that as a low seller confidence. Low seller confidence is an indication that the sellers are not so serious on that day. Sellers are not so serious. So let me show you one another interesting example. It's a completely different example, but it provided a lot many nuances. That especially last Friday it happened in Reliance. I'm not sure how many of you watched Reliance, but the TPO size, each and every letter is called as a TPO. Each and every letter over here, it's called as a TPO. Right? So TPO means time, price, opportunity. So it's a basic of market profile, basic element of market profile. Like something in our body, we call as the basic unit of our body is like the cell, right? We are made up of cells. Likewise, the market profile is made up of tiny piece of letters called TPOs. So this TPO, the TPO price which I'm using over here is an kind of an 50 paise. Every 50 paise, it will be plotting a letter. And every day we'll be having a letter A from letter M. Almost 13 letters we got on a daily basis, letter A to letter M. Only the last letter is 15 minutes. 15 minutes. Other letters are, each and every letter is almost 30 minutes of duration. Now, what is so interesting about last Friday's Reliance activities, that Reliance is keep on coming down. But when it is coming down, it given me tremendous information about what is happening inside the markets. Now, let's explore what is happening inside the markets. Think about this example. I'm not sure how many of you watched this, but if you haven't watched this, a lot of interesting data points you can collect. So the yellow color line, so there is a yellow color line. That yellow color line is something which is an interesting information, which is nothing but we call it as a halfback. What is an halfback? Halfback is a center point. Halfback is nothing but midpoint, which is nothing but a high plus low divided by 2. So this high divided by low over here and divided by 2. So this high and low divided by 2 is what the halfback. H plus low divided 2, which is usually points to the midpoint of the previous day. So the yellow color line is the previous day's halfback. So yellow color line is the previous day's halfback. All right, so notice that yellow color line. And the white lines are the halfback of every 30-minute charts. So this white line is the center point of letter A period center, A period halfback. And watch out this level. This is C period halfback, C period halfback. Now, what you will be so informative on that particular day is that the markets are giving lot many information. Watch out the letters, the C period high. C period high, what is so special about C period high? Can anybody say that? What is so special at C period high? That's one of the interesting nuances. You can just type it out. Probably, I guess many market profile traders are there, so you can just type it out. It's the B period halfback, the B period center. The white line, what I circled is the B period halfback. What is so special is that B period halfback is exactly equal to the C period high. C period high. All right. So that is the one of the very first information. I'm just getting that. Who trade this kind of information? The C period high was exactly touching the halfback level. Exactly 50 paise. Like so, not even a 50 paise difference. It is such an exactness. Who trades this kind of activity? Maybe algos or traders. Mostly algos. Algos are nothing but also traders, right? Algo is also part of the trading community. So in a nutshell, I'll be saying that it's done by traders. Mostly intraday traders. or intraday algos. It can be intraday traders or intraday algos, because somebody is watching this level of precision. It can be either an algo or it can be mostly traders. The traders are the one who like to come up with this kind of perfection. There are many traders, especially the big traders, they willing to wait exactly at the previous day high, previous day low to come and take their positions over there. Mostly big scalpers, they do that. So think about that. It is not the first time we are seeing that. Watch out this letter also. The C period halfback. What is so special about it? What is so special about it? Yes, exactly. The second point is that watch out the C period halfback. The C period halfback, which is nothing but the C period midpoint, is exactly the D period high. D period high. So interesting, right? But it's not the end of the story. There are a lot to that. Watch out the E period high. What is so special about E period high? Something special about E period high. So that this is also an part of the intraday traders. So intraday traders are coming and trading this kind of, maybe an algo also. Again, algo is pushing down. So the watch out that F period high. The F period high was just 1 point, just 50 paise away from the previous day's halfback. So let me put it down over here. Previous day, I mean, the F period high. F period high. Today's F period high. Just one TPO, only one TPO, that is 50 paise below yesterday's halfback. Yesterday is the yellow color line. Halfback, the yellow color line. Notice this yellow color line. Just only one TPO away from that. This is also done by the intraday players or mostly algos. So maybe you can say like an intraday algos. Intraday. And still that is not end of the story. Watch out this circle over here. There is one more special over here. The D period center is exactly the G period high. Just exactly, just one TP above that. That is also done by intraday. And that is still not end of the story. Watch out the J period high. The J period high also exactly one TPO away from the I period high intraday. Now this is the information I just calculated. Right? We just gathering. We've been having a live session, and one of the live session I've been noticing that this is dangerously intraday traders are getting short and short and short and short. That particular day, what is happening is that the intraday traders are shorting the markets. They've been continuously shorting the markets, and they are very visual in shorting the markets. And these kind of days I have seen this many times. Not only this is not the first time I'm seeing this. Even we had done one such YouTube videos also about this multiple intraday halfback. Such kind of nuances is very, very difficult to monitor from the candlestick charts or bar charts. With bar charts, it's very difficult to monitor. Let me tell you, let me be very honest. It's very difficult. Maybe we can do some automation, but still it's very difficult to understand the context behind that. So if everybody is shorting intraday traders, so when they will cover, somewhere they have to cover, right? If all are intraday traders, they are coming at very visual reference level, not only once, but how many times? 1, 2, 3, 4, 5 times. 5 times on that particular day. In fact, not only 5 times, I guess. These also, yeah, it's 5 times. If you consider that this H is just 1 TP away from that, and this I is also 1 TP away from that. Multiple places they've been showing up. This is not exactly, but very close to the 1 TPO. This is also very close to 1 TPO. This is 2 TPO difference. This is also 2 TPO difference. This is also 2 TPO difference. But if you forget those things, still we have 5 times intraday traders, they're coming and buying, selling over there. Now I want you to think about, let's say the room full of intraday traders are there, and everybody is shorting Reliance. Nobody is booking their profits, but all are intraday traders. And we are shorting the market still, let's say 2 o'clock. After that, what will happen? What do you think what will happen? Think about that room full of 100 people are there, all are intraday traders, and everybody is going and shorting Reliance till 2 o'clock, and everybody is pushing the price down. And after that, what? Probably I'll be sitting on a profit, right? I'm an intraday trader, so I have to square off my position by the same day itself. If I'm an intraday trader, other intraday trader also be sitting at a profit. Think about the traders at the A period or at the B period who are sitting over here at the C period or even at the D period. They are sitting on a profit of how much? They're sitting on a profit of almost 60, 70 points, or even a 50 points, also 5% move in Reliance, right? So the traders are coming and shorting these markets. Almost we know that everybody is a trader. That means nobody is going to take their positions home. Nobody is going to carry forward their positions home. Naturally, what will happen? They will start booking their profits. Let's say when 2-3 intraday traders in the room are booking their profits, what will happen? The other traders will also try to book their profits. So let's say, let me book my profits. And that will push the price again up. And that will motivate other traders to book it up because they are losing their positions. Now, the trader who are sitting at a deep profit, now because the prices keep on rising up, they will try to again close their positions. So again, another 20 people, another 30 people will be closing their positions. Price will be started shooting up again. So other traders who are, then some other traders will be getting into a loss. Especially think about the traders who are shorting at the J period, the last minute. They might be sitting at a loss. Again, they also have to close their positions. So they will come for a buy again. Once you are a buyer, next you are a seller. Once you are a seller, next you are a buyer, right? So all these sellers are turning themselves into a buyer. That is why the short covering move is happening. So when I was watching, I said like this is a dangerous information which is happening out there. Probably these kind of days when multiple nuances are there. Nuances means small tricks which is happening. So a lot many visual reference levels are there, which is happening in this structure, right? So think about that. The structure is almost 70 points down. So when at the I period, my comment is like, I'm seeing so many intraday traders out there. Most likely, a possible short covering is likely to happen. There is a tremendous risk is there in involving in shorting these markets. Many traders, what they do, they see only the price, they just chase the price. But if you know the context, you know that all these shorts are done by the trading community. What you can do is that you can prepare to go long. Of course, you can expect this level to get a clear and other levels to get a clear and other levels to get a clear. And most likely even up to this point. So probably you can split into multiple targets. So that particular day I said like maximum I'm going to target up to this point. Maybe it's good to do a partial profit booking up to this. This is T1 and this level you can use it as a T2. That is what my comment on last Friday. So you can use up to this T2, you can consider booking your profits. So probably you can use this for partial profit booking. That kind of levels, even with this kind of crazy volatility, you will be able to decode meaningful information from there. And mostly, you know why the short covering is likely to happen. You know why. You know why? Because you know what happened in the past. You know why. What happened in the past? Who comes for a trade over here? Who comes to trade over here? Who comes to trade over here? You know the what and why. That is where you'll be able to predict why this move should happen, why the short covering move should happen. The short covering move is what? Nothing but intraday short sellers are covering their positions. Short sellers are covering their positions, which is highly anticipated. When more and more crowded intraday traders are coming and shorting these markets, they are highly vulnerable for short covering. The same is true on the opposite side. If more and more intraday buyers are showing up, maybe second half market can crash. So at least the other people, they don't have any idea why this happened. If you want to know the why, you need to know what happened in the markets. All right. So just a small promo over here. The tool, we are going to do a session, kind of a mentorship program for almost 1 month of mentorship program where we are going to closely cover 85 hours of training session is what we're going to cover over here. Right. So we are mostly going to cover on market profile. What you can practice from market profile, right? So personally, I'm going to share a lot of my experience about market profile, especially how to trade in a low volatile markets, how long to wait. Especially, we talked about what is happening in the markets. Right? We will be extensively talking about what the traders are trying to do in the markets, what the intraday traders are trying to do, what short-term traders, intermediate traders, and long-term traders are trying to do, where they are entering at what levels. So based upon that, how we can derive the support and resistance level based upon what traders are doing in the markets. So we'll be primarily focusing on three categories. One is price, time, and volume. So price and time is what we call as a price distribution, and volume and time is what we call as a volume distribution. So market profile generally helps traders to understand which direction to trade. Should I have to follow the trend or should I have to trade against the trend? So what is the overall market confidence? The one of the example in Nifty, which I explained, I was explaining about how that sellers are not serious on that day. If sellers are not so serious, right, it's more of a buying opportunity. Not every time, but most of the time it is a buying opportunity, especially when things are getting extreme sentiment. Now, the same thing happened on last Friday also. No, not last Friday, but when the nation got locked down, right? So there was an entire lockdown was there. Let me show you that session also. We will come back and we'll run the promo later on. So when the entire nation was getting locked down, this is where we got the lockdown, right? When we got the lockdown, 25th of March. 25th of March. What happened on that day? Something interesting happened on that day. Same thing was there, same scenarios. US markets has been down last Friday. I mean, US market has been mildly down, not a bigger down, but no, I guess the US market has been drastically up, some 13% or 12% up is what I've seen. And the US, all the markets are up, and only Indian markets are down because they imposed 21 days of lockdown. It's considered as one of the negative news there. I mean, in Indian market, it's considered as one of the negative news. People are hoping for a circuit, and despite that, in fact, the SGX Nifty was trading around 7,300 levels previous day night. Even at the morning lows, SGX Nifty was trading around 7,600. Later, it went to 7,700, and then 7,780 at some point of time, very close to the pre-open. And when the pre-market opens, Nifty was like it opened around roughly around here, almost around the 7,730 levels. But think about that, the overnight markets, the SGX 50 was drastically negative. It even went to at some point of time 7,300, 7,500 levels, which we never seen in the live markets. So this is what SGX Nifty traded last night. Even in the morning also I'd seen 7,595, 7,600 handles I was seeing in SGX Nifty in the early morning. But despite that, it's not getting materialized at the open. At the open, it is not materialized. What is not materialized? That extreme negative sentiment. Extreme negative sentiment. If it would have materialized, right, it should be another 500 points gap down. And that 500 points gap down doesn't happen. Now, those are the places you have to think about it. Such kind of extreme emotions. When extreme emotions are running in, you know that nation getting a lockdown is an extreme emotion because none of the business is going to work. Almost every business, they have to shutter down their business. Absolutely zero transactions are going to happen. Economy is going to come to a standstill. But what the market is doing? What the market is doing is that you should not look into what the market is doing. You should look from what the market is not doing. That particular day, what the market is not, what the market haven't done. What the market haven't done. Many people focus on what the market is doing. One of the day when there is extreme emotions is happening, what I'll be focusing here is that what the market haven't done. So what do you think what the market haven't done on that particular day? Yes, of course, the markets are not selling off. Not selling off. So that's a crucial information. That's a crucial information for you to initiate longs. Of course, I also went long on that day, but not on a serious note. I had taken lighter positions on that day. But what is not happening in the markets are more important, especially when we are in a crisis kind of scenarios or extreme panic, extreme emotions. You have to think about what is not happening. It's very difficult to strike because many people will be seeing the price will be like minus 1 points down. Oh my God, they'll be getting scared. So despite that, you have to take the sequence of information. Okay, SGX Nifty was down by 700, 300 points, but it is not getting materialized, which is we've been opening better, a lot much better. The extreme impact is not there. And still, even the previous day low is not taken out. Right? That's a valid thing, right? The previous day low is not taken out. So which is good. Even if they're not, entire nation is just getting into a lockdown and still Nifty is not able to break down the previous day low. What a shame, right? So, which is what you have to think about what haven't happened in the markets that particular day. That gives a tremendous odds from your trading. At least you would have avoided shorting these markets. Especially there are many traders, they would have been expecting a circuit. They would have been avoided most of the unwanted trades because they are mostly part of the emotional games. People are hoping that Nifty will anyways crash because the entire nation is in lockdown. It's very easy to come up with that opinion. But that is where the process comes in. The process saying that it's an extreme emotions, of course. And what the market haven't done is that market haven't crashed at all. And the selling is there, but it's not a serious selling, which is anticipated. SGX was anticipating almost 500 points capped on that is not materialized. One of the good places you should go and learn to buy. Or if you're not buying also, what you should not do in this kind of market is that shorting these kind of markets when things are not getting materialized is a very, very bad idea to go and short these markets. Now, my comment on we used to have a Slack portal. Right? So we used to have an kind of a community portal where we used to share informations. So we talk about a lot many such things, such kind of nuances during the live markets. And let me show you what I had spoken on that particular day during the live markets. So we used to talk about, we used to prepare for the markets. Every half an hour, we'll be preparing something like this, right? So let me show you what I had prepared on that particular day. So 25th of March. So a lot of discussion happens over here, and especially the people who are attending TradeZilla and Option Hydra kind of sessions. So this is Wednesday 25th, right? So Wednesday 25th, where we are. Oops, that's slightly slower. So this is the one of the day, I guess. I done on my Nifty trades. Oops, yes, yeah. So one of the day, like my 21 rupees options, 21 rupees options went down to something like 173 or 175. 175 it has been. It's a very interesting setup which I traded on that particular day. But anyways, let's come back to the point here. That's not the thing. Let's come back to the 25th of March. So 25th of March, my opening comment is that I never made a such kind of comment unless there was an extreme emotions. Enough selling is not happening, right? So what is not happening is more important than what is happening. Lack of selling is strength. Lack of selling is strength. The kind of what I anticipate is that more of a dull, boring price action. Second half, we need to reevaluate. That's what I prepared, and most likely I was waiting for some sort of a breakout to happen and to trade that breakout. And I guess we got that signal around kind of a go ahead. Been continuously monitoring the markets. Markets have been still, it is asking us to wait. Still, it's balancing. Price was still going sideways, and around middle of the day, right? So somewhere around 12 or 12:30, right? So which is what we are able to get that signal, like around the day's preparation was like. So we got so before buyers are driving this, still price is inside the range. So need to check if the breakout failure or not. Around 12:45, we are getting that signal. High confidence buyers. So no visual reference level means this particular day is not controlled by traders. So see the confidence is turning into high buyer confidence. So those are the places you should learn to go and trade the breakouts. Those are the places trading the breakouts are successful because this particular day is not controlled by traders. Somebody is controlling these markets and the selling is not happening. So nowhere I'm able to see anywhere any sort of not even a single bit of bearishness. I'm not able to see that, right? So such kind of day uh, the day was keep on going like kind of an tricky one. Like it's somebody was asking, should I have to exit the longs or hold or exit? I said like hold with the trailing stop loss because these are the very few days you will be getting one of the high confidence days. Part of the game, what we practice is that we never ever fight the high confidence markets. So we used to keep on referring something called market confidence in market profile. And part of the game, what we do is that high confidence buyers, when high confidence buyers are showing up, some big players are coming and showing up. That's what it means. So those are the places where you have to learn to go along with them. Or at least, if you don't want to go along with them, at least you should not be shorting these markets because trading against the high confidence buyers is one of the dangerous idea a trader can go and practice. All right. Again, coming back to the markets here. So what you can identify here is that where one of my favorite thing, what I will be mostly focusing on market profile is that where the weaker hands they used to keep their stop loss. We will be able to estimate their stop loss. Generally, we have a fair idea. If you have a fair idea about what the traders are doing, you have a fair idea about where the dumb traders, at least the weaker hand traders, are keeping their stop loss, which is very easy to focus using market profile kind of tools. And apart from that, if you try to compare market profile with technical indicators undoubtedly they are good, but what it says is that most likely where the trend is emerging, what is the momentum, what is the volatility, or what the volume indicators are saying, whether accumulation, distribution, smart money. So it doesn't talk about what traders are trying to do in the markets, particularly what intraday traders are doing, what long-term players are doing. So that kind of bifurcation, that kind of interesting information, it doesn't give me from an intraday perspective. If it is going to give me a lot many nuances, which tells that what is happening in the markets. I know that whether I'm in a race like a Ferrari race, or I'm whether I'm in an international match, or I'm in a Ranji Trophy, or I'm playing the street cricket. How do I know that? Only by looking into the market profile, we will be able to get such kind of details. The detailed information, what is happening actually at the market. You'll be able to get a bird eye view, and that is what help you to position yourself. Market profile will not give you buy or sell signals. Market profile gives you an idea how you should trade today. When things are going on like this, and sentiment is going bad, when the entire world is crumbling, how you should prepare when the 2017 low is breaking, or when there is no serious sell-off. There is a serious sell-off anticipated, but the serious sellers are not happening there. In such a kind of places, how you should position yourself. That positioning is really important. Indicators doesn't talks about positioning. Indicator only talks about buy or sell. It doesn't tell what kind of risk is there when you're buying. It doesn't tell what kind of emotions are running out among the traders. But if you know what kind of emotions are there, if you know what the traders are trying to do, you have a pretty good odds in your favor that what you should do and why you should do. That why is seriously missing from most of the indicators. That's what I'm just frankly saying that that's one of the primary reason. Otherwise, I'm an indicator trader right from 2009 to 2014 mid. I've been trading indicators systematically. I'm in a systematic trader, and of course, I had done an automated trading as well in my career. I had traded indicators like kind of an in a day, at least one or two buy sell signals I'll be getting it. I'll be mostly placing those orders. That's what I had done. But I had never learned anything about the markets. But my real market learning started from 2013 onwards, where I got introduced to market profile by one of my friends. And mostly from that day onwards, the things has been changed down completely. Initially, it was like a kind of an ABCD. I thought like it is initially something like an Elliott wave or something like that. But later on, I thought like it is really the one which talks about what is happening at the ground level. At the ground level, what the traders are trying to achieve, whether they doing a good job, whether they are doing a poor job. Is the sellers are doing an good selling today, or they are not serious sellers? How I can understand, how I can position myself. If I know that, I can play my game better. That is really an interesting stuff. That is what it motivates me to get deeper into market profile. Otherwise, I'm not an my nature of my core strength is from building indicators and building mathematical tools, right? So this is the one which has fascinated me. In fact, I had done a lot many automations on market profile based tools, and some of the automation I had given even giving inputs continuously to well market profile tools. So most of my inputs they had converted into an automated reference levels, right? So which is so far a good thing. So what I observe in market profile on a day-to-day basis is that what kind of profile structure is getting developed. So and what is the tempo? How fast the market is moving? What is the market confidence? Which we keep on measuring every half an hour once. And then visual reference levels. One of the examples we had seen in Reliance, right? We had seen in Reliance, we have seen one of the examples in Nifty, how the visual reference level used to happen. What it says about that, and exactly how to time those visual reference level. When you should time it, when you should not time it. That is what we want to learn into market profile. So what are the skills required for a market profile? If you are very new to market profile, of course you have to learn to cover the basics, market profile basics. I'm going to refer some of the books by end of this session, which will help you to understand what are the books you should refer to kickstart with market profile. Of course, auction process. Market profile follows the auction process. That's the basic foundation of market profile, and that's the basic foundation of auto flow kind of tools. Like again, market confidence. Most of the beginner level traders, they fail to focus on the market confidence. I focus primarily, I give more importance to the market confidence, because that tells me should I have to trade with the along with the short-term player, should I have to trade with the smart money, should I have to trade against the dumb traders, when I should trade against the dumb players. Everything will be explained via market confidence. That market confidence part is totally missing in most of the indicators. Most of the indicator part is totally missing. And of course, the intraday trade setups. So I had classified closely 35 intraday trading setups, which we'll be explaining on Tradesler 3.0, and building a market profile context. So part of the game, right? So part of the game, let me explain what is the market profile context. What do you think a market context is? What do you think what is market context as per you? Just put it out. What is the use of trying to understand the market context? Many times you would hear from many traders that you have to know what is the context which is running in the markets. You have to know what is the market context. As per you, what is the market context? What do you think? What is the market context? Mood, okay. There is general mood. You're talking about the market mood. Yeah, of course. What is happening currently? I guess Mohammed Maideen, he is very much into market profile, it seems. Who took control? Who are in control? Great. That's from Wan Kumar and Nitish Kumar. So let me tell you what market profile does here is it does lot many things, right? So one of the things it try to say here is that so what it says, what market profile itself it does is that market profile, it generates a lot of information. That information, tiny piece of information, every half an hour once, or every 5 minute once, or every 10 minute once, at its own time, it keeps on generating information. It can be a visual reference level, it can be a key reference level, it can be an strong reference levels, a weaker reference level, or a weaker stop loss. It generated in the form of a information called market generated information. So it is like we had seen some of the market generated information, like price was coming and touching exactly at the half back levels, or previous day's half back levels, or previous day highs, right? So such kind of nuances. There are often nuances also. Nuances are interesting reference levels, or some short tricks, what is happening inside the markets. Our job is to collect those information. We collect those information very frequently. We don't go by the buy or sell signals. Why we do this is that we want to improve the quality of our trades, to improve the quality of the trades and to decrease the quantity of the trades. Even if you are taking one trade or two trades in a day, you need to know why you are taking that trade. Many people, they don't have an idea about why they are taking this trade. Because the RSI is cross 60, they want to buy, or that Ichimoku is turned down and they want to sell, or Heikinashi is going positive, so they want to go and buy. Those are nothing but you are just simply tracking the price. That is not the real context. The real context is what is happening inside the markets, what traders are trying to achieve. Now that is what the market generated information talks about. It can be a VIX, or it can be a news factor like the S bank is falling, or it can be crude crash and markets are reacting to that, or it can be a news announcement from an RBI which happened on last Friday, or it can be a news announcement from Prime Minister which you had collected previous day. It can be an economic event, or it can be an event outcome. After that event, what is happening, how the traders are reacting, how the price itself reacting, how the price distribution is reacting. So those kind of tiny piece of information. So we watch such kind of tiny piece of information every half an hour. We collect it in a form of an Excel sheet, in an Excel format, or kind of an Excel or a document format. I prefer to collect in an Excel format. We collect that and then we try to convert that collection of data into a context. The context is what it explains what the traders are really doing in the markets. It focuses what traders or investors are trying to do in today's market. So we don't focus about, we are traders, right? We don't focus about what is going to happen next 7 days or next 1 week or next 1 year. We are short-term traders. So we want to focus on what is happening right now. The context focus about what traders and investors are doing right now. Now, why this is so important? It is so important because it helps you to figure out best possible trading opportunities. Best possible trading opportunities. Not every time it will be pointing to a buy or sell. I'm not talking about just buy or sell. It also helps you to wait. Should you have to wait or not? And in real world, none of the indicators talk about how long you should wait. But market profile, when the context is saying that if there is no serious buying also happening, no serious selling is also happening, when market profile is saying like that, you should learn to wait. That is part of the game. When it is saying buy, still you will be able to create your own trading strategies. In live market, you'll be able to create trading strategies, and you will be able to execute, and you will be able to monitor using profile, everything using the profile structure and the nuances, which is a highly and a radical approach according to me. Because this kind of approach, very few people they do on a day-to-day life, and I've been doing this for almost 6 years, day in, day out. I've been watching Nifty, Bank Nifty, and of course, my recent addiction is with USDNR. And slowly, I'll be moving towards commodities as well. I'm thinking of moving towards crude oil because crude oil looks like it's providing some interesting opportunities. Maybe from next month onwards, might be moving towards crude oil as well. My core focus at this point of time is on USDNR, Nifty, Bank Nifty, and very few selected stocks. Stocks like high liquid stocks like Reliance or HDFC Bank, ICICI Bank, those kind of high liquid blue chip companies is what I'm talking about from a very, very short term perspective. So part of the game, right? So you need to understand what is the context. Of course, a good knowledge about Ninja Trader and Ami Broker is very much required if you want to use these kind of tools. And you need to know what are the short-term nuances. A lot of short-term nuances. Today we talked about some of the intraday nuances. What are the intraday halfback or intra-bar halfback? All those are nothing but intraday nuances. The same way, there are a lot many short-term nuances also there. So a combination, if you have a pretty good idea, if you're a trader, you need to have a pretty good idea about what is an intraday reference, what is a short-term reference. That will help you to narrow down your trades, narrow down your focus on focusing only on quality trades rather than quantity of trades. Now, if you watch many traders in the markets, they want to do 3 trades, 5 trades in a day. Just like that, they want to do that. They want to do some counts. Out of 5 trades, I want to win 3 trades. Now, what I am saying is that even if you're taking one trade in a day, you need to know why you are taking that trade. And you need to know why the markets are doing that. Only if you know what is happening in the markets, you will predict why it will happen. And of course, there are a lot many other tools are there. Order flow, again, one more interesting microscopic view into the markets. In fact, it digs into the 5-minute charts and it explains what the buyers and sellers are trying to do in these markets. And of course, I'm not today going to talk about order flow. Maybe some other day we look into the order flow or trading strategy, because it's again another ocean. If I want to start now, it's not going to end by end of the day. And there are one more interesting topic called the dynamic profile. Dynamic profile is kind of a dynamic volume profile. Again, a very interesting tool to monitor nuances, especially intraday and positional setups. You will be able to get live such kind of setups over there. And these kind of key skills requires, so these things you can learn only by observation. Somebody can teach you, but you have to go back and observe these things. You need a lot of observation skills. You have to develop your observation skills, right? So that is where you become an experienced trader. So if you want to become an experienced trader and you want to get better over a period of time, right? So you need to have a lot of observation skills. You need to know how to observe the markets. You need to know when to take a go long or go short kind of decision, and when to wait for an opportunity and why you should wait. Moreover, you need to know why you should wait for that opportunity. That why is the only reason which helps traders to mitigate a lot of unwanted mistakes. And of course, we've been doing in our own mentorship program. We are starting this April series. You can always go to tradezilla.co. There is an link out there. So you can go to tradezilla.co. And you can see the complete event instructions over there, right? So we've been doing a lot of sequence of webinars as a promo. We'll be doing this, and the complete 1 month of mentorship program you'll be able to start seeing from here onwards. It's totally, we are going to cover 85 hours of content. Mostly the examples, whatever we are going to quote, is from market profile, order flow, mostly from the live examples, or the recent example which happened in the last couple of months, or what happened in January, what happened in March, or what happened in April. That is what we're going to spot most likely. We will be covering right from the scratch. We'll be starting with market profile, order flow, and tools like dynamic volume profile, and the tutorials like how to handle AmiBroker software, how to handle NinjaTrader software. Now, all those things we will be going to start right from the scratch. In fact, we are going to have 40 hours of live training sessions during live markets. I'll be explaining how you have to practice the framework. In fact, TradeZilla itself a framework to trade any kind of market scenarios. Let it be sideways market, let it be trending markets, high volatile markets, which we are experiencing right now, or something like an dull, boring markets. How to understand why a market get into a sideways, how we can spot a sideways market much earlier ahead of others, how we can spot an top, whether the top is done or the bottom is done, what kind of setups we have to practice. So that is what we're going to cover over here. Most likely, you after TradeZilla 3.0, what you will be getting is, and you will be having an idea about how to trade any asset classes. It can be an index, it can be a stocks, it can be commodities, or it can be currencies. The core principles remains the same. Right? The same principles which I'm using in Nifty, I'm using the same principles in Reliance. The same principles I'm using currently in USD also. Of course, I haven't traded much into commodities. Sometime back in 2018 or 2016, here and there I had traded commodities, but I'm not a core commodity trader at this point of time. My core expertise is with Nifty, Bank Nifty, and very few stocks, and now recently USD INR. So you will be able to apply the principles under any market conditions. Let it be a sideways, trending, compressed, high volatile, low volatile, and you will be able to understand the supply and demands. Like most likely the liquidities in the markets or market dynamics, how the market dynamics is changing. So a lot many things we will be looking into that. Right? So we'll be mostly focusing on. All I can guarantee you is an institutional grade mentorship program. I'm not going to say like, if you're going to come into my session, you will be making tons and tons of money. I'm not going to say that. But of course, that is the ultimate agenda. Everybody is working towards that. But all I can guarantee you is a skill, an institutional grade skill is what I can guarantee you on learning market profile, order flow, and volume profile, mostly from my own experience and the experience which I gathered from the traders and from the trading community. So we've been discussing day in, day out about markets, right? So I've been bombarded with lot many questions from the trading community. So I have to keep on go back and work around, or if there is any mistakes which I had done, why that mistakes, how I had overcome from those mistakes. That is what mostly we'll be talking about, mostly from the trading experience. And what I'll be teaching here is that how to develop a market context, how to anticipate a trader's behavior, how to identify smart money and how to identify the dumb money, and where the people are trading their stop loss, why and where short covering happens. In most of my cases, the why will be very uh, highly focused in my training sessions. My training sessions, I'll be focusing on why and where big drop happens, why and where short covering happens. Many places you would have witnessed short covering, but anytime have you ever thought why there is a short covering is happening? Probably we'll have an answer. Like after the short covering, we'll always get to know that like FA had done some buying, that's why market covered. But most likely we'll get to know after the markets. But during the markets, when the markets are running live, how we can anticipate that the short covering is likely to happen or not. And of course, we'll be learning the tools like Ami Broker and Ninja Trader kind of tools, right? So most likely we not only going to focus on the trader's behavior, we are going to focus on the price-based behavior also. Many studies, especially the price action studies, are most of the other studies, it doesn't focus much on the trader's behavior. It focuses very less on the trader's behavior, but it focuses more on the price behavior. But here we are going to focus on both traders' behavior as well as the price behavior. Totally organized. The entire Tradezilla 3.0 is totally organized by Febinar's team. And let me tell you the sessions, what we are going to do over here, right? So the entire objective is to develop a framework, to provide that framework. Framework is like a software framework. Probably you would have seen that Google is very often coming up with launching many tools like TensorFlow, or even there are JavaScript packages, lot many versions are there. So right now, what I'm going to talk about is a Tradezilla 3.0. It's an enhanced framework. Mostly, it's a kind of a systematic thinking, how you should think in this market and how you should reduce your trading emotions when you are doing a live trading, how to exploit trading edge on your own. It's more of an mentorship program to provide independent thinking and thereby making traders to do an independent trading rather than depending upon the experts, rather than taking the opinions from the other traders. How you can build your own framework, right? So how you can create your own trading style. It's all about that. So most likely 45 hours of weekend learning and 40 plus hours of live training session. Of course, you will be providing access to 200 hours of recorded videos. We already done some 2 Tradezilla sessions. Those 2 Tradezilla sessions, you will be getting access to those 2 Tradezilla sessions. Closely, it covers 200 plus hours of recorded videos and lifetime access to community webinars. We've been doing every month at least one community webinar. We'll be doing it where we'll be revising some of the topics or any new techniques which are coming in. We'll be talking about that. Or at times we'll be talking about algorithmic trading. At times we'll be talking about Ami Broker. At times we'll be talking about Ninja Trader. So most likely we'll be circling in those aspects. Most likely we'll be talking mostly anything which is any new change in market dynamics is coming in. We'll be talking about that. And a lifetime access to our own private trading community, the Slack, right? So where we discuss day in, day out about what Nifty, Bank Nifty is trying to do in the markets. Continuously, we'll be talking about it. And of course, if there are any stocks are doing something crazy, we will be talking about that. And it's a totally a no nonsense community. Most likely people, they come and talk only about markets. They don't even talk about jokes, politics. They completely stay away from that. Mostly who are there in the community are core traders who are coming and engaging. They are coming here to learn about market profile and order flow. And most likely what is anticipated from the participants is that most likely an basic futures and option understanding, a strong time commitment towards an active market understanding. And of course, a lot of curiosity to learn radical and new concepts and willingness to spend more on screen. Only those traders who are very serious in learning about these kind of market understanding. We call that as a market understanding. And how, if you are getting more and more emotional, if you feel that you are getting more and more emotional often when you are taking decisions, or you're not confident about taking decisions, then probably market profile is the one thing what you have to experiment with to gain confidence and to gain confidence in yourself and in your trades. So we've been talking about a lot many things over here, and in fact, let me talk about one more interesting setup, which how you should prepare on Monday session. So we learned many things, right? What is happening on monthly? It's been trending down, and weekly it is kind of an still it is trending down. It's been trending down for almost kind of an 1, 2, 3, 4, 5, and 6. Almost 6 weeks we've been trending down, and in fact daily also. Daily, if you see that something different is happening. What is happening on the daily is that daily is keep on one time framing higher for the last 4 days. Last 4 days, prices continuously keep on making higher lows. It's something different, right? So it was completely, the trend has been turned up, kind of a V-shaped recovery so far. But is this V-shaped recovery is going to happen? I don't have any idea. But for Monday, I'm seeing that a bit of risk is there around the open. And what you can see is that the immediate support zones, the immediate support zone is what you have to consider over here. Let me tell you why I'm seeing it as a risk. Even on Friday also, I was seeing a risk in Nifty as well as in Bank Nifty. I'm seeing both the risk is there in both Nifty as well as in Bank Nifty, whereas the risk is there more in Nifty. Let me tell you why later on. But at this point of time, so this is a line, there's a single print line over there that is considered as a kind of an immediate support band, which happens to be around 8,300 kind of levels. So that's an immediate support band. So on Monday, what I'm anticipating here is that probably if most likely it's good to think about scenarios, right? So if price is likely to open over here, something like kind of a 100 points gap down or a 200 points gap down over here, which is what most likely anticipated. I'll tell you why. But if it is coming and rejecting over here, kind of an, you can look for a rejection setup probably towards 8,300 kind of levels, or most likely the previous day low is going to be an interesting reference. So as of now, I'm not sure where the SGX Nifty is trading, but I guess last when I had seen it was trading a bit negative, some 100 points, 120 points negative, I guess. So even if there is going to be a gap down, so most likely if the buyers are going to come over here and they are going to do some sort of a middle of the day rejection, most likely we are going to end lower, but my expectation is less than 8,300. I don't think we will be breaking 8,300. Even if we are going to break also, we will be expecting some sort of a bounce from those levels. That's what I've been expecting over here. So I'm expecting most likely the price to trade in this band on Monday, most likely. So the question here is, are we going to bounce? If you're going to bounce also, there is an immediate resistance which is coming over here, which price can reject back and which could put the price again back down again. So some sort of an reference level, like this is what we need to monitor. So the 8,300 or some kind of an 8.2, 8.9 kind of levels is what I'm going to refer on Monday, even if there is any deep gap down, right? So even if there is going to be any push up from here, most likely I'll be looking for a test towards 8,672. So I have only two views over here. First is like if there is a gap down, and price started recovering back in the first half, I'm most likely expecting a sell-off over here around this prominent point of control. One can initiate a sell-off. That is the point number one. That is a view number one. The second view is that another important reference level which I'm considering is the single print zone from 25th of March, right? So that particular day, if there's any gap down and immediately price started opening down lower, and we are going to see some sort of a rejection over here. So most likely I'll be trading towards the prominent point of control as one of the target zone. As one of the target zone I might be trying to trade towards. So most likely I'm expecting overall, I'm expecting price to contain within this band. Let me tell you why, because we are in year ending, right? So we are in a year ending. So year ending buying will be happening. A lot of adjustments will be happening. Year end adjustments, most likely year end adjustments will be there from from institutions, right? Institutions like FI, DIs. So most likely they'll be busy in year-end adjustments. Probably they don't allow the markets to crash, or they don't allow. At least they will not allow the market to crash. That's what I'm thinking here. So that case, 8,300 is one of the support zone. One can consider that as a support zone, and they can look for an. Most likely, the dips are likely to be bought back, or if there is any rise on markets, also max to max. My view is limited to 8672 kind of levels on the upper side. So if there is any rejection I'm seeing, I might be going for a short. Or if I'm any rejection, I'm going to see around this 8,300 kind of levels, I might be consider going along towards this prominent point of control as a target. And volatility is there. Of course, 300, 400 points volatility is there. But despite that, you should not have any kind of weird thoughts, because already the March month is done. March month craziness is done. Whether it is going to repeat in April or not, I'm not sure about it, but I'm sure pretty much about one thing. The year-end adjustments is not going to be a crazy one. Of course, it's going to be an um, maybe slightly a calm market. That's what I'm going to see on 28, 20. We have sessions on 30, 31, right? These are the two sessions we are going to happen over here. So in a near term, at least 30, 31 or 1st of April, I'm not going to expect any major crashes in the markets. Even if there is any crash, which is limited to 8,300 on the downside, and if there is any upside on Monday, most likely there's 8672. This is the range I'm expecting. I'm expecting the intraday range to cool down. So far, the range is extraordinarily high. The intraday range, which I've been talking about over here, it's extraordinarily, super extraordinarily high. Probably I'll be expecting this range to cool down. At least now last 2 days, the range has been bit cooled down, not a bigger cool down, but of course, 456 points, 519 points is comparatively better compared to the last week of trading session, which is totally comparatively better. So I will be expecting this range to get smaller, something like 450 or 350 kind of levels in the upcoming days, which will be cooling off a bit. But definitely, this is going to take a lot of time to cool off. This is going to take a lot of time to cool off, and so at this point of time, the short-term trend is still remaining positive. So when the short-term trend is clearly positive, right? When the short-term trend is clearly positive, maybe market will go into some sort of a sideways action. And then maybe later on it might be initiating down, or somewhere in the April we might be going one more down or not. We're not sure about that. But what you should not do is that as long as the trend is keep going up, as long as the short-term trend is up, it's really a bad idea to go and fight against the short term. Right? So if you want to do that, you need to have a lot of odds in your favor. So part of the game, when the short-term trend is up and markets are not doing much. Of course, last Friday we had a rate cut announcement. Definitely, there might be some negativity. Last Friday we had some negativity. That negativity can get spilled in the open, but later on, what happens, whether the negativity is going to continue or not, is what you have to learn. If you are seeing a rejection around 8,300 levels, definitely one of the good places to look for an intraday long setups. That's how I've been prepared. Right. So I guess there is a couple of more interesting stuff I would like to focus on, right? So, in fact, the market profile itself, it's been closely related to the normal distribution pattern. This is a very damn basics over here, where I guess most likely normal distribution you would have been studied during your high school studies, right? So, anybody able to recollect what is a normal distribution? If your central limit theorem, probably, let me remind you, it's central limit theorem. You would have been studied in high school mathematics. If you haven't studied, let me teach you. It's like the center is the mean, the center point is the mean, and we have a area which is covering like -1 standard deviation, -1 SD, and this is +1 SD. The area covering the -1 SD and +1 SD, the area is nothing but the probability of distribution, which is what they call it as an 68.2%. Now that is the basic foundation of market profile, because market profile, if you measure the TPOs, right? If you see the TPOs will be most of the days will be forming that kind of similar normal distribution kind of curve. And that, instead of taking 68.2%, we have taken a bracket over here, this bracket, which measures 70% of the trading activity. And that's what it's called as a value area. Value area is nothing but where the 70% of the trading activity is happening. Right? So, and the center, where more you're seeing a blue color dot, which is nothing but where more trading activity is happening, where traders are focused on that particular day more, especially the short-term traders, the dealers, the the wholesale vendors, what the wholesale vendors are trying to do in this market and what the retail traders are trying to do in this market. You will be able to measure using market profile. Now, of course, you might be thinking, what? Who are wholesale vendors? Now, in the markets, right, there are many traders who are nature is itself short-term traders. Short-term traders. So some of them are like these short-term traders. They are mostly brokers. The brokers, their nature itself short-term trading. Like Edelweiss, they have their own dealing desk. Zerodha have their own dealing desk. Kotak, they have their own institutional desk. Like lot many trading desk is there. And for some people, it's a family business. Family business. They know the markets. They do this markets in and out on a day-to-day basis. They come and involved in this business. They know how to make money with this. So they are mostly wholesale vendors. They acquire large inventory and they distribute inventory. They also do accumulation and distribution in the market. But they do what they do for 3 days, 5 days in the markets, and then they will again distribute. Again, they buy it from the markets and then they distribute. So most likely they operate like a wholesale vendors, like a D-Mart or Metro kind of guys. And the third one is mostly from the known community, prop traders. They are a bunch of traders who trade in their own accounts, who are also exchange members. So these people, we call them as an wholesale vendors. They do day-to-day operations on a daily basis. Most likely, their nature itself short-term trading. They will keep on going long for 4 or 5 days. Again, next to another 4 days, they'll be going short in the markets. They don't give any commitment to their positions. These kind of guys. But when they are piling up, they'll be adding to their position. They keep on adding to their positions for 3 4 days, and then they'll be cutting down their positions. Again, they'll be adding to their positions. That's what we call that as an inventory is getting added up or not. So we'll be discussing many things about how the traders are managing the inventory, what the wholesale vendors are trying to do, and what retail traders or what small traders are trying to do in the small markets. We will be focusing on those aspects. And in fact, the some of the basic terminologies is what I would like to talk about. And with this, probably we'll try to finish up for the session. I guess. What is the time now? Time is almost 9:45. Later on, we'll try to take many questions. All right. So the basic thing about market profile, especially for the people who are very, very new to market profile, let me tell you, the market profile has multiple components over here. So one of the major component which we've been talking about here, right? So let's see that this is market profile, MP. MP stands for market profile. And side by side, we are having volume profile. Market profile talks about price distribution. Price distribution. Whereas volume profile, it talks about volume distribution. Volume distribution. All right. And on the left-hand side, what you're having is a kind of an order flow information. Order flow. So these are actual traded volumes. Actual intraday volumes. And it also has a bifurcation. How many of those volumes are buyers and how many of them are sellers? Maybe I have to elongate a bit. But if I try to expand it, you will be able to see that how many buyers and how many sellers at each and every price level. Each and every price level, how many buyers and sellers are there? For example, you can see that this particular price, there are so many buyers on 25th of March. You'll be able to see the recent day, how many buyers and sellers are there. And there's a table there which tracks many metrics. The metrics like what is the point of control, what is the IB range, what is the something called rotation factor, what is the overall TPO count. On a day-to-day basis, it tracks the metrics. And it has many automated reference levels also. There are a lot of automated reference levels like double mechanical references, right? So and something like this particular day that we are having reference levels. Like recently, I've been monitoring one of the reference levels. Like let me go to the recent chart. This is April series. The prominent point of control. That's one of the prominent point of control. I've been thinking that maybe if there is any downtrend, we can use this as a potential target. Or if the price is coming at the opening itself, we are seeing some sort of a rejection around those levels. You can think of initiating some shorts. That is what I'm thinking. on probably on Friday, right? So I mean, coming Monday session. And as of now, my thinking at this point of time is that is this market bottomed out? That's the question. Most of the traders, it's bugging their mind. So I would say like this is doesn't looks like a top set. I haven't able to. I'm not so far able to find any top. I mean bottom setup. We are able to figure out a top around January 2020. We are able to figure out a top, which I already explained in January trades. Like that particular day, I think January 20, we had a kind of an ORR setup, right? So ORR kind of setup, and similar setups are there in Reliance. It is there in HDFC Bank. So simultaneously, we predicted that as Nifty topped out, and probably Reliance and HDFC Bank also topped out, which I explained in January trades last time. And but if you ask me now whether the bottom has been formed or not, but at this point of time, I'm not able to see any strong bottom in this market. So at this point of time, not much of a clue that this is a bottom or not, but most likely it is not a bottom at all. Maybe sometime later on, if not now, I guess not, now it is not a possibility because markets are not balancing at all. Somewhere the market has to start balancing. Maybe Monday could be in one place where the market might be balancing on 30, 31 and 1st of April. But later on, I guess April is also going to be a bit of negative. That's what I'm thinking over here. Not a great negative like March, but maybe mildly negative. And most likely we might be revisiting again 7,600 levels. Most likely in April is what I'm thinking about here. At this point of time, we are not trading shorts. At this point of time, I'm okay to trade both longs and shorts. That is how I prepared. Because of the year-end closing and year-end adjustments, mostly from the institutions, most likely you don't expect any major bearishness. Even if it is there, it will be getting digested around the opening itself. It get digested. So maybe April, I think most likely it's again there will be one more round of selling towards again 7,500 or 400 kind of levels. And later on, maybe market might be bottoming out. Maybe during middle of April or first week of April is what I'm expecting that market to bottom out. Otherwise, next 2 days, I don't have much of an opinion. I'm willing to trade both longs and shorts. That's how I've been preparing over here. And coming back to the session here, so we are going to have a couple of strategies. Even in order flow, we're going to cover lot many trading strategies. Mostly close to close, we're going to cover 16 plus intraday scalping strategies is what mostly going to cover over there. And order flow is one of the finest tool to cover scalping. And this time we have done lot many extensive drill session, order flow drill sessions. We are going to cover this time a lot many things with interactive videos. And in fact, order flow itself, we are going to talk about lot many setups like trending setups and mean reversion setups. Lot many setups we're going to cover in TradeSlot 3.0, and we are going to closely cover something like an 10 to 12 order flow trading principles. Some 12 to 12 principles is what I'm planning to cover this time in TradeSlot 3.0. And in dynamic profile setups, we're going to close to close. We're going to cover some 8 plus trading strategies over there. 8 plus how to identify nuances using order flow, how to use dynamic volume profile to approach the markets. I'm sorry, there was a bit of a disconnection over there. Now it is back and it's fine. So totally, we are going to close to close. We are going to cover lot many intraday and scalping trading strategies using order flow. Followed by that, we will be talking about close to close 35 plus intraday trading strategies using market profile and 15 ways how a market can top out or how a market can bottom out. That is again, we are going to cover a lot. Right. So, and especially for the people who are very, very new to market profile, there are 2 books I'm going to refer over here. One is Mind Over Markets. That is an old book from Jim Dalton, but Jim Dalton had written a new book that is called Markets in Profile, which he had, I think, during the start of the 21st century, he had released almost 2005 is what he released this book, Profiting from the Auction Process. And the other book is The Core Foundation from the Inventory itself, Peter Stadelmayer. One of the very interesting book you should go and read out there. The book is from Stadelmayer on markets from Wiley Trading. Right, so done by the inventor himself, Peter Stadelmayer, and Stephen B. Hawkins. Right. So I guess we can take a couple of questions here. Let me take a couple of questions. There are a lot of questions on the Q&A section. Kindly post your questions only in Q&A section. If you have questions, kindly. How to identify put unwinding in option chain? I guess this is from Arun Kumar. I guess this is not related to today's session. Kindly ask questions only related to what we had spoken so far. We had discussed a lot many things on market profile, right? The high volatile trade setups. Can you explain a bit on turbo RSI and ATR indicators? Again, this is also slightly not relevant to the topic. So yeah, there was one valid question over here. So they're talking about how you're saying that market will be dropping, or how you're saying that Nifty will be dropping out. So that is where I'm using one more indicator parallelly in tandem. That's nothing but an kind of an my own proprietary tool. Like it's called as an extreme indications. These extreme indications, like usually it try to print. It fluctuates between plus or minus 3 standard deviation. It also closely follow price distribution. It looks for price distribution, and it tried to follow something like an extreme sentiments, right? So it's good in identifying such kind of extreme sentiments, like something like this kind of places. Extreme sentiments are there. So what is missing is that last 5 trading sessions, that extreme sentiment indicators are missing. If it has to print some extreme indication, it has to print some negative over here. So very recently, we can expect that price to go and touch something like 8,500 or 8,400 kind of levels before bouncing back up. So that is what I'm thinking over here. So even if there is a price is going to open casually, there will be a drop, or even if maybe at the opening itself there could be a drop. That is what my anticipation also. Maybe the opening could be, there could be a drop. After that, what happens really matters. After that, maybe a sideways, and then price could again bounce back. That odds are quite heavy there. If there is opening itself, there's going to be a drop. Maybe that drop might be lasting for maybe an half of the session. The remainder of the session, there could be a V-shape recovery. Second half might be mostly focused on the recovery. That's what I'm thinking around the open. So yeah, that's what motivates me. The extreme indications from the setup where the 3 standard deviation move, which happened. This is what I'm showing is on a 5-minute time frame charts. So what is clearly missing here is that the extreme indication is missing for last couple of days, which I've been talking about it in my option hydra session as well. That I'm expecting that there could be some sort of an extreme indication formation in Nifty. For that, Nifty has to show some sort of bearishness, right? So that is what I'm thinking. Most likely could happen in a very near term. In a very near term, there should be some sort of bearishness might be coming in, but after that, maybe the bullishness should take control in the markets. A bit of bullishness, so that the 8,300, the single print support zone which I've been talking about it. Maybe that is a zone I'm expecting price to take some sort of a support. Any bounce back, it can happen from there. All right, let me take other question. There is a question from when sellers are too much, then market go up. Why? I guess Anant, there's a question from Anant. Anant is asking about what when sellers are too much. Let me tell you, most of the traders, they look into the top 5 bid and top 5 ask, right? So they'll try to understand where there are more buyers, where there are more sellers. That is a beginner level approach. Better don't do that. That's a wrong way of looking into what buyers and sellers are trying to do in the markets, because those are mostly limit orders. They're not going to move the markets. Whatever you're seeing is the order book. Order book is nothing but completely filled with limit orders. Limit orders, they don't move the markets. What moves the market is the market orders, for which you cannot see it. We can only realize from the markets, right? So Ananta, my question is that you are looking into the wrong information. Most likely, try to avoid looking closely into top 5 bid and ask levels. It's going to create more confusion than we are going to get more clarity over there. All right. There is one more question from without indicators and using candlestick charts alone, is it possible to book profit? Gandhi Madinathan. Let me tell you, Gandhi, I've been using indicators most likely as a confirmation point. I don't use it for my entry or exit, but I'll use to get a perspective, most likely to get a perspective what the ATR is doing, what the extreme indications are doing. I don't take signals from there. But I used to get indicator. I will be primarily using indicators only to get a perspective. Of course, during live markets, most likely I'll be using tools like market profile kind of tools or order flow kind of tools. Most likely I'll be staying away from traditional indicators. And even I don't even look into candlestick studies. When I'm looking into the market profile charts, I focus only on market profile charts. And very frequently, I might be once in a while I'll be flying towards that extreme indication. What is happening in the extreme indication indicators? That's the maximum I'll be looking into that. So if it breaks 8,300, what is the next support? That is a question from Bala. So what is the next support? Let me check it out. I guess if price started trading more time into down below 8,300, there are no supports at all. So maybe the next destination is like probably we are going to look into. There is no support. Frankly, there are no support. 8,300 is the very first support which happened to be on the last week, right? So anything down below that, not much of a support. Not much of a support is what I'm seeing at this point of time. Not much of a support. So this 8,300 is going to be an important reference to watch on Monday, right? So even if it is breaking a bit, even if it is going to break a bit, how the sellers are going to behave, it really matters. If they are strong sellers, right, they will be breaking and they'll be staying down below this level. This is an indication that something has been changed in the markets. Probably there is a short-term trend. Now we are seeing a short-term downtrend. That is a confirmation point to short further. However, if there is any gap down and price is breaking 8,300 and that buyers are not so serious, point of control is building above that level. Usually the next target destination is towards the 8,672 points. That is what a reasonable target level to achieve with a given level of volatility. Of course, the 350 point is casually possible, even with this kind of market environment. Volatility is likely to reduce in the next couple of days. At least next 3 days, volatility is likely to reduce a bit. But at the same time, this level of volatility is more or less likely to stay for quite some time. We will be slowly reducing that. We don't see that 500, 600 point kind of volatility. Maybe like 300, 400 points kind of volatility is what we have to think about that. So we have to learn to control our expectations in the markets. If you are expecting that another, again, markets will be crashing 7%, 10%, like which happened on March month, I doubt, at least I will not come up with that kind of expectations. Right. So what I'm going to do from here is that from here onwards, I'm going to limit my thinking about the markets. Maybe I might be expecting some 200 or 300 kind of opportunity. That is what we have to focus on, rather focusing on something like 500, 700 kind of opportunity. Yes, if you would have asked me last week, I would have been said that yes, that is possible. But now we are far away from such kind of emotions. At least we had matured a bit as a trader. Most of the traders has been matured. And so I guess the fear is there still in the markets, but eventually it will be slowly, steadily cooling off. That is what I'm thinking at this point of time. There won't be any drastic fall or drastic rise is what I'm not going to see that most likely. And volatility is going to stay for some time, but controlled volatility. That is what I'm talking about it. All right. All right. So guys, it's been high time now. So I guess you guys have to return back to your home. Of course, kids, right? So kids, managing to trade along with kids is a terrible idea. Let me tell you that because I have a kid 5 years old and another one is 7 years old. And it's very difficult to manage, especially markets are going crazy and kids are roaming around you. Like you will be really going mad on that too. This kind of crazy volatility. Anyways, get used to that. Even if you're facing such kind of things, get used to that. Anyways, it's your kid. And happy. I'm very happy that so many people showed up despite the lockdown. Right. So glad to see you all here and have a wonderful Saturday. Thank you again.